Welcome to this explainer on the professional investor mindset. Today, we're going to fundamentally shift exactly how you view the stock market. We are officially leaving that giant, intimidating casino behind, and we're going to learn how to build real, lasting wealth by thinking like an absolute pro. So let's just dive right in.
Is the stock market just a giant casino? If you ask most people, they'd probably say yes. They open up an app, they stare at these flashing red and green numbers, and they just assume it's all about luck or, perfect timing. But here's the actual truth. The world's most successful investors, they aren't gambling, they're not guessing, and they are certainly not chasing the latest social media hype.
Because their secret weapon isn't some ridiculously complicated math formula, and it's definitely not a crystal ball. It is entirely a mindset. Before you ever even look at a stock chart or read a single financial report, you really have to learn how to think. And that means starting all your research with the business itself, literally completely ignoring the stock price for a moment.
I mean, think about it for a second. If someone walked up to you on the street and said, "Hey, you want to buy my business?" Would you just blindly hand over your hard-earned cash? No way. Of course not. You'd be firing off questions left and right. You'd ask, "Are you making any money? Do you have a ton of debt? Who's your competition?" And yet millions of people buy stocks every single day just because the price happens to be going up. Professionals, they do the exact opposite.
So, to really think like a pro, we have to get our definition straight right out of the gate. What actually is a stock? Now, to beginners, it's usually just a ticker symbol, right? A three-letter code just vibrating on a phone screen. But that's a massive mistake. A stock is literal ownership in a real-world business. When you buy a share, you aren't just buying a digital number, you're becoming a partial owner of a living, breathing company.
Let's put it like this. Think of your absolute favorite neighborhood pizza shop. If you bought one single share of that business, you wouldn't just be holding a meaningless piece of paper. You'd actually own a tiny slice of their blazing hot brick ovens. You'd own a fraction of their secret sauce recipe, a literal piece of the cash sitting in the register, and a cut of every single pizza they sell tomorrow. When you finally realize you are a true business owner, you'll stop obsessing over those squiggly charts and start asking the real questions. Like, hey, is the pizza actually any good?
In this mindset shift right there, this exposes the critical difference between investing and gambling. Sure, on the surface, opening up a brokerage app looks exactly the same for both. But gambling is built purely on hope. It's chasing trends, praying you're going to get rich overnight. Investing, on the other hand, is built on evidence. It's putting in the work, doing the homework on the quality of a business, and happily accepting a few short-term bumps along the way to build real, long-lasting wealth.
Picture two different people for a second. Person A treats investing like total pro. They spend, say, 10 hours reading up on a company's profits, really understanding their competition. Then you have person B, who opens an app and just smashes the buy button because some guy on YouTube yelled that the stock was going to the moon. Honestly, who do you think is going to be wealthier in 10 years? Person A is building a sturdy house on a solid foundation of facts. Person B, they're building a house on a cloud of hype.
Okay, now we really need to address the elephant in the room. Seeing a stock price drop. For a beginner, it feels absolutely terrible. It feels like you're losing. But a professional views a price drop in a completely different way. To understand exactly why, let's take a quick trip to your local grocery store.
Imagine you go in to buy a gallon of milk. Yesterday, it was $4. Today, you walk in and it's on sale for $3.50. Do you panic? Do you sprint out of the store screaming that milk is losing its value? No, of course not. You probably say, awesome, it's on sale. The stock market is literally the only place on earth where people run out of the store when there's a massive sale. If a genuinely great company's price drops, but the business itself is perfectly healthy, a pro doesn't panic. They just buy more milk.
To really drive this concept home, let me introduce you to what is probably the most famous story in investing, Mr. Market. Imagine you co-own a business with a deeply, incredibly emotional partner. Every single morning, this guy, Mr. Market, knocks on your door offering to either buy you out or sell you his share. Now, some days, he is completely euphoric. He's screaming that the future is incredibly bright and he offers you a crazy high price. But on other days, he is absolutely terrified. He's totally convinced the world is ending, and he's offering to sell you his share for just pennies.
Which brings us to a massively important rule you need to remember. Price and value are not the same thing. Think about your erratic business partner. The business itself hasn't changed one bit. The profits are exactly the same. The only thing that's changed is Mr. Market's mood. While the stock market is Mr. Market, it offers you prices every second of the day, but it does not dictate actual value. Your job as an investor is to take advantage of his wild emotional swings. You want to buy when he's absolutely terrified and sell when he's euphoric. You definitely don't want to let him dictate your emotions. And mastering your own emotions like that naturally unlocks your next big superpower, patience. Look, we live in a world completely obsessed with instant gratification and get-rich-quick schemes. But in investing, patience is actually your ultimate edge. Real investing isn't about perfectly guessing tomorrow's stock price. It's about giving truly great businesses the years they actually need to create massive value.
Think of it like planting an apple tree. Step 1, you plant the seed. That's you buying a wonderful business. Step 2, you water it and just let time pass. But look closely at step 3. Don't dig it up. I mean, you wouldn't dig up a tiny sapling every single week just to see if the roots are growing, right? Strong businesses need years, not weeks, to reach their full potential. The biggest reason most investors fail is simply because they get spooked by a little bad weather and they dig up their tree way too early.
So let's quickly recap some of the deadly beginner traps you really must avoid. Number 1, do not buy a stock just because it's trending or everyone else is talking about it. Number 2, do not obsess over the daily stock price while totally ignoring the actual underlying business. Number 3, never, ever panic sell during a temporary market dip. And finally, number 4, you've got to stop expecting overnight riches. Honestly, great investing is usually pretty boring. Chasing all that excitement, that usually just leads to empty wallets.
If you take absolutely nothing else away from this explainer, please remember these 3 keys to the professional mindset. First, treat every single stock exactly like you own the actual brick-and-mortar company. Second, remember the price fluctuates wildly all the time, but true value does not. And third, let time and compounding do all the heavy lifting for you. All right, up next, we're covering the big 3 financial statements. Now that your mindset is totally locked in, you are definitely ready for the practical tools. In our next explainer, we're going to dive right into these statements because once you learn to think like a real business owner, these aren't just boring spreadsheets anymore. They're actually like X-rays you'll use to see if a company is truly healthy or if it's just full of hot air. I want to leave you with this final thought. You have just mastered the absolute hardest lesson in investing, and we haven't even looked at a single math equation yet. Seriously, you are already miles ahead of the crowd, so the only question left for you is, are you ready to stop playing the market like a casino and start actually owning the world's greatest businesses? Apply this mindset, and I'll see you in the next explainer.